Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilby. I'm joined today for the last Striking Option show of 2018 with Bob Icino. Welcome, Bob.
Thanks for having me, Jeff.
Well, what a wild ride. Yesterday was the largest one-day point rally, not percentage, points, let's be clear, in the Dow Jones, and that was after the worst percentage drop for the S&P 500 for any Christmas Eve trading session ever. What are your thoughts here? Is it time to keep that chin strap buckled up?
Well, it definitely is. The percentage drop on Christmas Eve was more important to me than the point rally we saw yesterday. The NYSE volume hit about 5 billion on that 1,000-point rally, which was less than a week earlier. It was 5.1 billion. So it was kind of a low volume rally relative to the point move.
Well, it is interesting to see the way the volatility has come back into the market. Some people are trying to embrace this volatility. So let's get in this first lightning round to talk about that.
Let's do it.
Crude oil roller coaster. Wow, we have seen sensational volatility. Let's just rewind back to October, Bob, when the price of crude oil was above $70. Now it was about to touch $40, but we had one of the biggest days, a nearly 10% pop in crude oil yesterday. How are you embracing this volatility?
Yeah, you mentioned that 8% pop. Prior session, a 7% rally. So the volatility to me it's jacked, but it's showing the lower end of a range, which is what crude does. It trends, then goes into a range.
Understood. So what type of trade exam would you utilize to embrace or give a nice hug to this volatility?
Well, one of the ways you can take advantage of this sort of expansion in volatility is to sell a call spread. So I'm going to sell the 47.50 call spread as an example, which is the expires January 11th, and I'm receiving about $750 on this. Feb is the underlying. This was priced out at about $44.70 on that Feb contract.
Oh, that's great stuff. Interesting. You're looking for a little bit of a back and fill, but not any sustained time spent above $50, correct?
Yeah, again, this is going to be a new range until OPEC decides what they're going to do, and we see how this new price plays out in the shale patch.
Fantastic. Thanks, Bob. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
Let's do that.
Santa rally. Well, we didn't have one before Santa came down the chimney, but yesterday was one of the most sensational moves up in all equities. We saw just a phenomenal rally across the board in the NASDAQ, the Dow Jones, as well as the S&P 500. What's your takeaway after a day like that? Because it was breathtaking.
Yeah, again, weakness, holiday volume, and expanded vol. So I would expect these rallies to continue to be sold because buying the dip has not worked.
And the way I want to approach my trade example is just that, Bob. It's taking that jacked volatility we talked about. When you see volatility expanded the way it has, you can step into the market and use a technical approach. So by selling the 2,500 call and buying the 2,550 call, that's a 50-point call spread, this trade example collects $700. It's going to expire on January 11th, that Friday. But this is an attempt to harness the volatility subsequent to such a move higher in equities yesterday. And remember, the March E-mini S&P 500 futures contract was trading around 24.20 when this trade example was priced out.
Yeah, I like the expiration on this. Trade talks between the U.S. and China aren't scheduled to start again until Jan 7th. So there's good timing on this trade example.
Well, and that's the market, kind of had a bit of a crisis on hand, no doubt about that. But it's more of a confidence crisis. It seems like the economy is still strong. So one of those things you mentioned, one of the headwinds that we're dealing with, maybe that turns things around and allows this market to come back up and test that 2,500 level, correct?
Yeah, agreed. And part of the reason that selling rallies is probably what's going to continue to happen.
All right, Bob. Well, thanks as always. We want to wish you a happy new year and a wonderful 2019. And also thank you for tuning in to Striking Options. And please tune in all of 2019 as we will come back again to Strike Options.